So I'm looking at your forecast. Holiday sales to increase by 3.7%. That's the same increase in CPI at 3.7%. So give us a sense. How much of this increase is inflation? How much of it is a true increase in consumer spending?
That's a good observation, Frank. And I think you're right. It is the same as CPI. But remember that what we're looking at in our measure of retail sales ex auto is a different measure of spend than what you would see in overall CPI. So you really want to look at each individual category and compare the spending by category to the inflation by category. So that's the first note that I would mention. But the second point is that you're absolutely right. We're looking at nominal spending, and part of the gain in spend is a change in prices. That's always the phenomenon. And this year, I would actually argue that it's less of a factor. If you think about the last 2 years, inflation was the story. It was all about how consumers were going to be able to navigate the big and high inflationary environment, how they were going to make their dollars work more. Now we're actually seeing a lot more price discounting. We're seeing some categories with outright price decline. So I think it's really a nuanced story that depends on the category of spend.
You know, speaking of categories, we here on CNBC, we often say the consumer is stretched. They're shifting from goods to experiences. Then I look at your report, electronics expected to see a 6% jump, one of the biggest jumps in this. I thought during the pandemic, everybody bought their electronics. What's the catalyst for this surge this holiday season?
Well, it's been a few years now since that surge post-pandemic, and we know how quickly technology changes. New gadgets are being introduced. And it could be that maybe we're starting the new replacement cycle around technology for certain items. Now, we're not saying this is across the board. We're not saying people are going to go buy, all new appliances for their house again. Some of these large, durable goods, there you might have that saturation of demand still. But for many other categories, it does seem like it's starting to be appealing again. And that's certainly what we're starting to see in the trends in our insights.
So we're talking a lot today about the Instacart IPO. Obviously, their core business is grocery delivery. Not asking you about the IPO. But looking at the report, grocery delivery expected to increase 3.9% this holiday season. What does that actually tell us about the economy and the consumer to see basically a 4% increase in grocery spending year over year?
So I think it's important to look at food spending holistically. So to look at spending at home and spending away from home. And one thing that's been clear heading into this season throughout the year is that consumers have been really excited about going back to restaurants. It's part of this whole, move more towards experience-based spending. So I do think that's still going to be more of the trend into the holiday season, is that when people make the decision about how they want to consume food, I think that there's still a prioritization about going out to restaurants. For grocery stores, we're returning to something that's a little bit more resemblance a stable or normalized trend in spending around grocery stores. And that's happening in part because we're also seeing a slowdown in inflation at grocery stores as well. Some categories of food that had outsized gains, think about eggs or certain dairy products, they're returning back to a more trend-like growth rate for prices. So when consumers now walk into the grocery store, they have a lot more choice. They're not faced with as much of a price shock. And they're also thinking about where they want to consume, whether it's at home, at restaurants. And restaurants are certainly doing really well right now.